It's not just climate change. I mean, you have more people living in more places, building bigger houses. And in California and in other states, you do have a foot on the insurance agencies in terms of how they can express rates, right? You've had it since 1988. I'm not saying they can't make presentations and the rates don't go up at all, but I'm saying it's not just let the market decide. And if you knew this in California and in other states too, not just California, why don't you have a supplemental system set up that's better than what you have with FAIR right now? Why isn't it handled like Fannie Mae and Freddie Mac, where you know the system needs support to have liquidity in it and proper coverage, so you provide for that? Public-private partnership that looks at it over a longer term than just year by year and crisis by crisis. And I'm coming to you, Rick. Don't think you're not part of the conversation. Go ahead.
Yeah, well, it's insurers that choose to sign one-year contracts, and the FAIR plan is going to be able to pay claims. Why? Because not only does it have reserves and reinsurance, but it has the ability to assess all member insurance companies to cover claims. But to your point about single factor, sure, we're shoving more people and businesses into harm's way, which we shouldn't be doing. We seem to have no ability at the local level to say no, and the underlying values at risk are going up. But I tell you what, more people and businesses in harm's way and the increased value of homes and businesses wouldn't matter as much if we weren't getting hit over and over again by these extreme and severe weather-related events throughout the United States. Now, you can look at Florida, where rates are 4 times the national average. They've created 2 taxpayer-funded reinsurance facilities. They've limited third-party lawsuits against insurance companies. They have a FAIR plan there called Florida Citizens, which it does not expose the private insurers. If it has a shortfall, it reaches out to all policyholders. They've allowed probabilistic modeling for years. They've allowed reinsurance costs to be included for years. They actually are lowering the standards at which insurance companies can enter the market. And guess what? The national carriers are not writing in Florida. Why? Because they've concluded that even at the highest possible price, even with the least amount of regulation, which Florida has, they can't actually sustainably write insurance there. Now, we're not as bad as Florida yet in California, and other parts of the country aren't as bad as Florida either. But that's the trajectory we're on, because principally climate change, not exclusively, but principally climate change, driving these events over and over again that are killing people, injuring people, destroying homes, destroying property, and making it harder and harder for the insurance companies to insure.
So, Rick, from the perspective of the industry, I know that you guys are getting beaten up on a regular basis because policies were pulled, and that's a bad look. But what is the industry's suggestion about what the answer here is? And first, start with why it isn't just greed, that you guys have a certain rate of return that you want to make, and when you can't make it, you get out of a market.
Sure, and it's good to have Dave Jones on here too, our former insurance commissioner, and he knows, you know, it's been our insurance carriers are publicly or privately or publicly owned, and they've got shareholders that want to see a return. And what's happening is the insurance carriers are going in for rate increases, and they're having to wait 3-4 years and then get denied or get a reduction. They've gotten there recently. They've gotten some increases, but it's just not enough. And these events that are taking place are killing it. And it's you know, there's different places to insure. It should be more expensive to insure yourself up in the hills versus down in the flatlands of Downey or you know, Santa Fe Springs. You know, and allowing the insurance carriers to have free market and have access to be able the rates that they need to charge, I think would solve the problem.
Yeah, but then it would be really expensive, and people wouldn't be able to build the same kind of homes, and maybe not in the same places, right?
It might be expensive, but guess what? As soon as there's some competition, the prices come down, as we know. And right now, we're down to just literally at this point, we have one carrier, California Fair Plan, writing business in California, but we're down to just, prior to this event, we were down to 2 carriers that we had in our office, when 6-7 years ago, we had 10 carriers we could check out and find the best rates for our clients.
Why isn't the solution what I suggested, like Fannie Mae and Freddie Mac, where you have a public-private partnership that looks at risk and looks at the needs and requirements over a big block of time instead of year by year?
Chris, Fannie Mae and Freddie Mac are in federal receivership right now. I mean, I don't think they're the best example of what to do. And here's another problem, right? Mortgage lenders who require you to have insurance actually are very astute, and they can detect when the insurance insuring your home is lesser value. And what a study found in Florida is that lesser rated insurance companies in deregulated Florida, which are allowed into the market, are insuring a lot of homes and a lot of mortgages. And the mortgage lenders don't want to hold on to that risk. And guess who they're selling it to? Fannie Mae and Freddie Mac.
Hey, thanks for watching. Go to joinnn.com to find NewsNation on your screen. And don't forget, click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.